Picture Avalanche's network roaring past 20 million transactions in a single day, fees pouring in, and a fresh privacy standard courting Wall Street. Now pin that on a chart that's nudging a year-long downtrend, pointing its nose at a $96 Fibonacci target. If you've ever wondered how a Layer 1 goes from sleepy to supercharged, and whether you can ride the wave before it crashes into headlines, stick around. Over the next few minutes, we'll unpack the numbers, the partnerships, the brand new Blackhole decentralized exchange, and the precise take-profit ladder that could turn $20 into a real moon mission. Ready? Let's dive in. First, the firecracker. On July 8th, the chain clocked over 20,300,000 transactions in a single day. A brand new record splashed across crypto Twitter. Coop's chart shows the volume spiking like a seismograph at the epicenter of an earthquake. More transactions mean more fees, more validator rewards, and crucially, more confidence that Avalanche's subnet model can scale when demand finally erupts. This is the raw network effect the last bull run lacked, and it's now written in on-chain ink. Pop over to DeFiLlama, and the numbers tell an equally bullish story. Total value locked sits at $2.3 billion. Daily chain revenue, roughly $9,000. DEX volume, a healthy $205 million rolling through liquidity pools while active addresses flirt with 43,000. Add it all up, and we're looking at a chain that's quietly monetizing traffic, not just hosting ghost farms. Remember, fundamentals are the oxygen that keeps any rally from suffocating when hype fades. But retail froth isn't enough. Institutions need privacy, and that's where Avalanche's new eERC standard storms in. The official AVAX thread is blunt. Banks, healthcare providers, even governments are legally required to keep data private, so public chains have been off limits. eERC brings encrypted ERC20s with auditable access, a missing puzzle piece for regulated money. If you've ever wondered what unlocks trillion-dollar capital, this is the key. No more on-chain equals full frontal. Instead, selective disclosure that satisfies auditors without stripping away decentralization. Nice tech, but who's using it? Avalanche answers with receipts. The California DMV has digitized 42 million vehicle titles. Citi's testing tokenized private assets for better liquidity. AutoPen has reimagined notarization. No biometrics, no queues. These aren't pilots, they're production. Enterprises are adopting Avalanche to reduce fraud, slash costs, and future-proof operations. Each successful deployment becomes social proof for the next Fortune 500 CFO pondering blockchain integration. The momentum isn't stuck in boardrooms. Look at Detroit Pistons. An up-top partnership turns everyday purchases into fan rewards powered by Avalanche. Think cashback meets Web3 loyalty. Sports franchises chase engaged audiences, and plugging their reward engines into AVAX subnets could expose millions of NBA fans to on-chain UX without crypto jargon. Every new redemption loop is fresh transaction flow, reinforcing that 20 million a day milestone. And to keep all that capital spinning, you need fast, permissionless swaps. Enter Blackhole Decentralized Exchange. We've arrived at the event horizon, Avalanche teased. The platform goes live with promises of deeper pools and cross-community tokens, plugging a liquidity gap many traders felt after last winter's lull. More liquidity pools incentives, more arbitrage opportunities, more fees burning AVAX, all feeding the tokenomic flywheel. Nansen's Q1 2025 report sprinkles extra rocket fuel. An AI alliance with Ether, crypto cards rolling out with rain for the underbanked, and that $100 million Web3 AI ecosystem fund. Cash, compute, and credibility, all earmarked for builders. Meanwhile, AvaCloud dropped eERC encrypted ERC20s with built-in auditability, checking both innovation and compliance boxes in one move. It's rare to see growth in so many verticals at once: gaming, payments, AI. Yet here we are. All this buzz is cool, but charts pay the bills. Let's pull up the weekly AVAX view. Price hovers around $20, pressing against a descending trend line drawn from the December 2024 high. A weekly close above turns resistance into a springboard. Heikin-Ashi RSI indicator mirrors the August-December 2024 setup, when AVAX ripped 220% in 4 months. Momentum is curling upward from oversold, and the visible range volume profile shows a fat node right where price sits. Break it, and the path of least resistance is up. Let me walk you through the profit ladder I'm using. My first trim comes in around $27, right at that 236 Fibonacci level and a strong psychological round number. If price momentum keeps rolling, the next slice happens near 34. Think of it as the old weekly support that flipped into resistance and now beckons for a retest. Should Avalanche push higher, I'll lighten up again close to $46, the 618 retracement that topped out the December 2023 rally. From there, the target shifts to 65, lining up with the full Fibonacci level and the heavy supply zone we saw back in 2024. Anything that remains becomes my moon bag, and I'll consider unloading it near $96, where the 1618 extension often sparks euphoria. This staggered approach lets early profits cover the risk while giving the rest room to run. The safety valve is a weekly close below $14. If that happens, I'm out and waiting for the chart to rebuild strength. Of course, every portfolio is different, so size positions so you can still sleep at night. Planning exits before entries is the real secret sauce. Add the fundamentals to the technicals, and we see a confluence. Record transactions prove demand. DeFiLlama's metrics prove revenue. eERC unlocks compliance. Real-world pilots prove utility. Sports rewards prove user-facing scale. And Blackhole DEX plus the AI fund feed the ecosystem loop. That's a cocktail we rarely get all at once. Could macro headwinds spoil the party? Absolutely, liquidity cycles still rule the jungle. But right now Avalanche looks like a coiled spring, and the chart agrees. If you're ready to act on opportunities like Avalanche or the next sleeper gem, here's something that can tilt the odds. I partner with MEXC, the exchange trusted by over 10 million traders, to bring you some really cool exclusive perks. Sign up through the pinned comment or the QR code on screen, and you unlock up to $8,000 in starter rewards. Fee vouchers, futures credits, even a Bitcoin position funded by MEXC. My favorite fast track? Stake 300 USDT for 2 days at 600% APR and collect roughly $10 while you figure out the interface. Plus, you'll trade with some of the lowest fees in the industry and automatic access to daily airdrop campaigns. If Avalanche really does sprint toward those Fibonacci targets, shaving 20% off every order, and banking extra yield while you wait, adds up. Take the first step, grab the rewards, and let the market do the heavy lifting. If this breakdown lit a fire under your research list, tap that like button so more people see it. Drop your price target in the comments, and smash subscribe because tomorrow we're dissecting another under-the-radar play everyone's sleeping on. In the meantime, cue up the video that just popped on your end screen. Smart money is watching right now. As always, stay curious, stay kind, and never stop learning. Catch you tomorrow in the next one. Disclaimer, nothing in this video is financial advice. Crypto is volatile. Do your own research and never invest what you can't afford to lose.